All right, guys, good morning to all of you. Can you hear me loud and clear? All right, I don't expect too many people to this morning because this is a National Day Eve, and I'm quite sure most of the parents are busy right now picking up their kids from school or having a long weekend since last Friday. All right, so once again, guys, okay, we're going to start our MAO very, very soon. All right, this is the eve of the National Day, 8th of 8. That means 8th of August 2022. All right, we're starting in about 1 minute time. All right. Hi, morning to you, Nelson. All right, morning to you. Good to see you. All right, how about the rest of you guys? Are you hearing me loud and clear? Okay, without further ado, let's start this MAO right now because I got something to do later on. Okay, let's go. Okay, today is the 8th of August 2022, Monday, morning MAO with Cal. Now, how many of you actually missed my MAO, right? That means that since last week, right, we have no MAO, right? Every day we wanted to have it, but because we have some technical problem with our TWB system with our broker, hence, therefore, it has terminated, it has caused some disruption to our sharing. Hence, I have to postpone and cancel our previous MAO sessions. All right, how many of you have missed it? If you miss my MAO, it's all right. Can you do something for me? Can you write something, a comment right now, and say that how much you missed the MAO? All right, that'll be something that I would love you to write. Write something there, okay? Why you missed the MAO and what's the reason for that? Of course, I have this very nice guy. I think he shared this with me. He said, "Kel, your MAO is like a Taiwanese drama serial. Thereby, if you don't watch it after the episode finish, right, usually they leave a cliffhanger, and after that, it's all right. You make you propel the word for it for next day." So he felt that I was missing in action, and every day this MAO is like it's always played at the back. So I feel very happy with this comment, and I feel that, well, not too bad. At least whatever I've been doing really makes sense. Yeah. Okay. All right. Thank you once again, guys. If you enjoy my MAO, I really appreciate that. Thank you. Thank you very much. Thank you, Jerry. Okay. So while we're waiting for your comments, let's just go into today's topic. All right. Can we trust the retail investors while Warren Buffett failed? All right. Now he didn't really fail because he's a long-term investor. So undeniable, S&P 500 in January high was 48.18. Now it's at 41.50. So the S&P have retracted 700 points from the highest point. So it's of course undeniable for investor who basically don't sell and buy more shares along the way, definitely will have his portfolio, a bit of reduction. That is definitely for sure. But in terms of revenue wise, right, he's doing still okay. So that's why this is what Warren Buffett failed, just make sure that we all have a common understanding. But nonetheless, we realize that something has happened. Retailers are buying shares right now. Retailers are buying shares, okay? And I told you since 2 weeks ago that the stock market will be going up. And that's the only reason for that is to make this the retail investors come in to buy into the market. This is something that I have shared many times before. And I told you the whole point of how Wall Street play this game is they will make everybody feel that if they don't buy it out, right, they are losing it out. So what actually happened is pretty clear. They actually created this thing and this feel that make everybody feel that if you don't buy right, you must be a fool. And what we call that? What do we call that? It's called FOMO, right? Fear of missing out. So you can feel that right now, right? A lot of people are buying into shares. And I'll tell you more about this later. All right, I did cover this during Saturday webinar. I'll add on today on this. So that's the reason why you can see that now the current situation between Taiwan and China is still very precarious. And of course, Japan has come into the picture. All right, because Japan is quite upset with the way the Chinese ships, right, is actually what they call around the area, and that is very uncomfortable. And of course, we have Gaza having a problem right now. Oh my God, okay. And of course, we do have China data coming out better than expected, which is kind of surprising, but still, there's a lot of problem going on right now. Thank you, Anthony. Thank you, Eugenio. Thank you, Jonathan. All right. Thank you guys for all the nice comments. Thank you. All right. So disclaimer apply as usual. Once again, we'd like to thank AIMS for their lovely support all this while. We appreciate that. And of course, we also sincerely hope that in the near term, we can settle the technical issue ASAP so that we can move on. Yeah. Okay. Now, I like this joke of the day. I think it's very practical. It's real. Of course, it's a bit of sad, but it's dark, but I like it. Okay. So let me read to you. When I grow up, I'm going to be filthy rich. Okay. So the father asked, that's great. How do you plan to make all your money? Easy. Get a job in Congress or the federal and trade insider information. All right. If you think about this, the first person that comes to your mind, who is this person? Okay. So I think it's without a doubt, right? You should know them. There's one particular couple that have been making a lot of money off Wall Street. Okay. And FYI, that is only based on whatever they actually, report. So of course, if those other accounts that they have or they would have, right, I think they have made even more, especially the offshore account. All right. But nonetheless as well, right? Okay, you should know who is this. I mean, which couple are we referring to? But recently, right, this particular couple, they lost a bit of money on NVIDIA. All right, they lost some money on this NVIDIA. It's quite surprising. So all I can say is this: either that they really lose it because of the fail, or because they have to lose some money to, unknow some of the investors and all the pressing media and stuff like that. I'll leave it there for you, but this is joke of the day. So if you don't know who is them, who are this couple, right? I think Jerry has just already gave the answer, and I think that's the correct answer. Okay, let's go. Now, before we start this month, okay, I already reminded you that based on the seasonal pattern since for the last 20 years, means from 2001 to 2021, the last 20 years, this is a seasonal pattern, okay? So what you can see is very clear. Usually we have a very strong rally in July, which we saw it have already happened. Then after that, at the start of the first few days, we should see a pullback, okay? Then generally in the month of August is quite a flattish. Only towards the last week, we can see a bit of rally. So will we see the same thing happening again? Will depend on this right now. And of course, incredibly, in September, usually we'll see a bigger rally, and then that is where the market peak. Okay. So of course, this is what a seasonal pattern may look like, and it's based on the statistics over the last 20 years. Now, for my view itself, right, I felt that there should be a little bit more pullback before a recovery stage instead. So this is how I feel it myself, okay, Cal. Okay, this is how I feel it if you'd ask me. All right, so this is my personal feel, and I'll explain to you more in detail when we go to the alternate market news, but still this is what we have for the last 20 years. Okay, take note of that. Very, very important information. Okay, all right. All right, now I want to update you guys on last Saturday. We had a very successful preview, all right, webinar preview. About 128 people came online, 139 people registered, 128 came online. That's a very good number. And of course, we covered a lot of stuff, plentiful. So a lot of you say that you miss it because it's a Saturday, you need to go and do your stuff. We understand that. So I rushed through it, and now I've uploaded what we missed last Saturday. Go to Trade with the Boys. You will see that I just updated the Trade with the Boys with the video that we recorded for last Saturday. Now, the thing is this, just take note, yeah? You are not entitled to the good discount that I gave on last Saturday, Sunday anymore, because we have a time limit time for that. But if you still want to join us as well, right, there's two ways to do that. One, contact us ASAP right now through Facebook. We will do a price arrangement for you. It will not be as good as the last week price, but it still be better than the usual price. Or you wait for 13th of August. Yes, 13th of August, I'm going to conduct another special webinar to update, okay, last week's sharing, because I have a lot of things to share, right? So there will be a another special webinar preview updating what I shared last Saturday. All right. And of course, at the same time, I'll talk a lot more on the local and US selected shares. Okay. So one take note of this, that it will be happening on the 13th of August on Saturday. More detail coming up later this afternoon. Okay. All right, because I have promised to do some coverage on DBS, which I hadn't had the time to finish it because there was some technical problem on Saturday. Hence, therefore, no worry, I will conduct a short video on DBS after this MAO later in the afternoon, and then I'll upload it by this evening. And then because of that as well, right, I realized that there's a lot of things to share for you, Singapore share. So this coming Saturday, I'll talk about the Singapore share. All right, anyway, I said this to you yourself. I believe that DBS should see a resistance at about $32.50, okay? So once we go around there itself, right, I expect the market to have some pullback, okay? I do expect the market to have some pullback. So let's take a look right now. What is the current situation in the DBS share? Let's take a look right now live. Okay, it is uploading right now. Okay, here we go. Now this is DBS share right now. And you can see where we are. And I mentioned to you, right, there should be some resistance at 32.50. I can put it down for you now. Okay, here we go. All right, so 32.50 is the level that I said and mentioned that we should have some resistance. But of course, it went higher. I mean, I'm not going to be able to predict the future, but I believe that 32.50 will be a very critical level for DBS in terms of technical. And you can see very clearly the market today, the low of today, okay, the low of today, you can see the low is $32.51, okay? The low of today is 32.51. All right, so that explains, tell you why I say 32.50 is a very important technical point. Now, for my personal view is this, I believe that there's a chance that if the market loses 32.50, the market will pull back down again. And the first number that I'm looking at is somewhere at about $31, okay? So traders take note. But of course, my personal favorite number to look out for will be at $30, okay? Now, of course, you may ask, how can this share come down, right? I'll explain more in details during my video, so watch out for that, okay? So DBS 32.50 is my support right now because it's supposed to be a resistance, but the market gap over it, then it becomes my support. But if the market stays there, then I believe that we should see a potential, support over there. And once you break below it, $31 to $30 will be the level that I'm watching, okay? All right, DBS, yeah? Okay. Now, this is getting a bit interesting. The fear and greed index right now is trading at 50. Wow. So from the low end of 6, right, in June, now it has climbed to 50. Now, we have all the negative figures coming out from the economy, on the US economy, but you can see the market don't really bother, right? This is what I meant. When the market want to buy, they will really buy. Okay, so now at 50, what does it mean on the chart wise? Take a look, everybody. Now, look at it. This is where the last time it hit 50, back in last year, this August period. Then when it crossed 50, it went higher. All right. Then when you break 50, it went down fast. Same thing again, but then at 50 is where it hanged over here. And same thing again at around 50, that's where it hanged. So in short, it's all right. 50 is one zone to take note of that. One zone. Okay, now the lowest we saw was around 6. The highest we saw is about 86. All right, so look at it. So 6 to 86, the middle of it itself should be around where? Well, 46 area, right? So that means that now we are above the average medium level. So that's the reason why I felt that, right, profit taking All right, profit taking should be really considered. Okay, so I put there profit taking time. All right, I know. By saying this again, some people say, Cal, you have really, the market has been going up. All right, we didn't really buy from the bottom and there's nothing much for take profit. Okay, so since profit taking can't be done, right, then you can consider to take a small position on the sell side. A small position on the sell side. So how to take a sell position, right? So obviously itself, I'm bringing this guy in now. And the one they're looking at is called VIX. Okay, let me bring you VIX itself. Now, VIX is something that I have been utilizing it whenever I want to make some money on the opposite side of the market. So let's take a look on the VIX, shall we? Now, this is a VIX chart, okay, over the last whole year. Take a look. Okay, so let's just look at the chart first, okay? Let's understand this all. Okay, well, let me just adjust this a little bit. Okay, there we go. Okay, so from the start of 2022, all right, the start of 2022, the highest it went was as much as about 39, okay, at 39. All right, the low of this year, the lowest point was at about 17, okay, 17. All right, so high is 39, low is 17. So where are we now? 21, okay. So to me, if we understand this number right now, if we look at it across the board, we put a technical line across it, okay, a very nice line. You can see that we are having a bit of support right now at about this area. So which means that about 21 right now, we are in the artificial support level. And in terms of RSI reading, all right, the last time we see something like this, okay, we can see a bit of common point over here. It shows that it's actually an uptrend potential. So now the vision is this. If this is to have a support right now, I do expect it to go higher to about 34 region, okay? So mathematically, how does it work then? Mathematically means that the downside potential is about 4 points. The upside potential is how many? All right, it's about how many? Yeah, 9 plus 14, 13. So in terms of risk reward ratio is 4 to 13. So in terms of risk to reward is about 1:3 times. Okay, understand this? So that means that, right, if I were to put a position right now to buy VIX at 21, and let's say hypothetically I put a stop loss at 17, I'm risking 1 to reward myself with 3 times. Of course, you may ask a question, Cal, the market has been very bullish right now. What makes you think that the market will be going to up? That's very fair. But later on, as I show you the charts, right, on the retail side with the S&P 500, then maybe that will change your mind. But at least now, take a picture of this right now, because this is going to be very useful for you, because this should be able to tell you that what might be happening in the near term. Okay? All right. So I'll revisit this when later part itself, because I say again, I can only tell you what I see in mathematics. The rest itself, you have to make your own decision later on when I share with you more information. Okay? Now, let's take a look in terms of the economic figures recently. Let's take a look. All right, so first of all, we can see that last Friday, we have a very incredible non-farm payroll. Really, really incredible. Now, the whole market was at 398 last month. Then the best part of this, the consensus came out 250. So they were expecting a lower number, which is really kidding me, right? I told you the number will be higher, and truth be told, it's actually higher. But the thing is that I never expected it to be above 500,000. Okay, so it's very, very funny because this consensus comes from many, many analysts. So either they are really, really a problem with their analysis, that they all come out a lower number, while the number is actually so high, or consensusly, they know that the number is going to be high, but they all mark it down so that they can benefit from it themselves. So Wall Street is a place whereby, you know, there's a lot of trickeries, lies, and stuff like that. And if you don't really follow it directly itself, right, you'll be kicked by the market. And that is why I said that. Okay, anyway, now moving forward. Now, what do we have here today, this week? Okay, on Monday, Tuesday, nothing much. But on Wednesday, we have the very important core CPI data. Now, do note the year-on-year data, they are looking at a lower number, which I kind of agree, because crude oil price has came down a fair bit recently. and commodity prices has came down. So it's kind of expected it will be lower. But if the number is 8.7 or 8.6, the market will be happy because it shows that the inflation could be peaking. But if the number is anywhere like 8.8 and higher, then of course the market will have to think twice. But the question is this, whether it's 8.6 or 8.8 or even 8.1, it's still 8%. And currently now, right, the so-called Fed fund rate is now at 2.75%. We are 6% away from one another. So seriously, it's all right. Whichever number come out, right, it may have a bit of joy, but it won't last too long. The initial jobless claim is more important because why? You have such a high employment data coming in. So by right, the initial jobless claim should go down, right? But if the economy is really bad, then this number will go higher than not. So again, I say again, this coming week, Wednesday and Thursday will be very, very important, especially Wednesday, the CPI data, and Thursday, the initial jobless claim. And both of them coming out at 8:30 p.m. Singapore time. So watch out for this on Wednesday and Thursday, okay? All right, so we're going to go into global news right now. Today is a bit of a shortened one because I have some things are not really fully prepared. So I'm going to get it on going first. So let's look at some of the local news right now, and then let's take a look what's happening now, okay? Okay, so first of all, the Chinese and Taiwanese warships play high seas cat and mouse is still ongoing, but drills is going to end soon. So as long as the drill is ending soon, it's all right. We should have come to closure here, but still, nonetheless, it's all right. This is not going to be nice. Fortunately, and good maturity from China, they didn't do anything. So now it's back, the ball is thrown back to Taiwan court and see whether they want to do anything else. But Chinese government is coming in strongly with some sanctions, and that is one thing that you must take note of that. Now the ceasefire in Gaza is all right, okay, has taken place, but very sadly it's all right, okay. There was some violence before that. So again, it's pretty sad. Hopefully it's all right, this one doesn't spread because this is again a place whereby you should know they may cause some crude oil price to move around. Now, the federal governor, Bowman, okay, Bowman says that there's a similarly sized rate hike. That means, in short, like looking at 75 basis points. So most of the Fed officials are looking at 75 basis points, but of course, some of them are looking at only at 50 basis points. Now, if you ask me about my view, is all right, I still stand at 75 basis points. I believe that, right, there's a 75 basis point coming in. Because why? Because now you must understand that this what we have right now is that this what do you call the unemployment, sorry, the non-farm payroll was very heavy. All right, the non-farm payroll is all right, it's actually very heavy and it's more than expected. So when non-farm payroll numbers are so high, right, that means that inflation, employment is at a very high level, hence therefore inflation usually will continue. So it's a very funny thing here as well. In order to lower down inflation, right, you need the whole economy to actually cool down a little bit. So if let's say the employment data is still at a very high level, that means Federal Reserve have a lot of room to actually hike more interest rate without causing a problem. And also that means that their hiking interest rate did not really pull down or cool off the economy. So this is something to take note of that. So that's why I believe that there could be a 75 basis point coming up, okay, in September. So September is still far away, okay? So we still have some time to go. Okay, next is all right. We do see a very interesting China export growth gains theme despite weakening global demand. This is very interesting. The numbers are actually better than expected. Say that it picked up in speed in July because there's some reopening of Shanghai and Beijing. So once again, it's all right. A bit of question mark here is all, but I'll leave it there. Now, Berkshire Hathaway, right, reported operating earnings surge. That means they earn more money, but they also reported a big investment loss amid the market rout, right? So we do expect that to happen. Their total earnings have went up to $9.28 billion. It's a lot of money, but also at the same time, they lost $53 billion in the investment because of the price coming off. But again, this shouldn't be focused because Warren Buffett said not to focus on the quarterly fluctuation in its equity investment because the stock market is down. Then if they buy stock naturally, right, their earnings will be lesser. This is really no need to say. So that's the reason why. Now, remember I talked about Berkshire. Right, let's just bring it into you now because I was asked last week, right, about Buffett, and I told you guys to take some profit off the table. Not too sure, remember? All right, here we go. Okay, remember that? I said that before, right, that about 300 is a good level to take some profit from the Berkshire Hathaway, all right? And I said that if you want to buy, you buy it somewhere near here at 276. So now where we are now at 292. We're still probably about 10% off my preferred price. So I think that 276 will be a better price. And of course, now we do have a crossover on the RSI and the moving average. So we do expect to see some profit taking coming in. Now with Warren Buffett prices, I mean, if Warren so-called the barometer not doing that well, right? So obviously it's all right. We do also expect the economy not to do that well, yeah? Now, but Elon Musk is now taking on with Twitter. Apparently, right, Elon Musk is challenging Twitter CEO to a debate on the bots, all right? We all know that there's bots running around in all the social media and stuff like that. And of course, very clear as well, right? Elon Musk is not happy, saying that it's outdated data is provided for him and some fake data set. So this is going to be fun because what if let's say anytime if let's say Elon Musk managed to really overwhelm his this CEO, right? Then of course Twitter share will come down very badly. Okay, but of course let's see because we still don't have any confirmation yet. We just move on from here. Now apparently there is still some danger according to some economy saying that right there's a bigger there's a potential of a biggest recession ever. Now basically it's all right. Who said this? Well, apparently let me just bring it into you. Who said this? This is the guy. Okay, he says that there's more potential selling coming in, which I kind of agree to a certain extent. All right, but of course you can see that Tom Lee is not saying that. Tom Lee says that there's a case whereby S&P 500 will go back to 4,800 by year end. You can watch this video on your own. Now, I'm going to bring in S&P 500 now as early as now to just show you my personal view. Now, my personal view is this. I suspect that there should be a pullback in the S&P 500. Then after that, slowly but surely, it will go up and then end higher, somewhere like this. This is how I view what will likely be happening for the next few months, all right? That means that I do expect the market to fall. And then the fall is all right. It may be able to stop around 37.50, or worse, the most, if you get really bad, really bad, we may see something like this, and then slowly but surely moving up. Okay, something like this. So it's either that we will see a new low altogether of this year, or we may not see the new low, but the pullback is somewhere around there. So this is my two views of what I foresee will likely be happening. In short itself, right, kind of bullish for the last quarter of this year. This last quarter of this year, I kind of rather positive. Okay. All right. So that is how I see for the S&P 500, and also ended the local and global news right now. Now I'm gonna go right into this alternate market news. All right, but before we go there again, I want to ask everybody here again, the consensus here, everybody. Are you bullish? Are you bearish? Or are you feeling sideways right now? Please give your answer right now. Bullish, bearish, or just feel that sideways now. Let me hear you out, guys. All right, we have 69 of you online right now. Thank you once again for coming online to listen to me. All right, once again, this is a National Day Eve. So tomorrow is a National Day, right? Stay home, really stay home and celebrate National Day together. I think that's a better thing to do. All right, of course, tonight, if you're going to go for a drink, it's all right. Please drink safely and social responsible. You should know that today, definitely the TPs are going to be out and out. So make sure that you take valet. If not, itself, just don't drive at all. Simply don't drive. Pay for Grab. It's cheaper because if you were to drive and we're not talking about you get in an accident. The worst thing is that you don't get yourself harmed, but you harm others. That's the worst thing itself. You understand? Because if you actually drive and you hit other people, right, you're going to cause misery to another family instead. So please understand that, okay? And of course, as you know, once you're being caught drink driving, then you will lose your license for 1 year minimally and get fined 3,000 and then go through the hassle of going to go for recourse again. And this is very silly. So for just a mere $50 valet or $50 Grab, you lose thousands of dollars for nothing. That is penny wise and pound foolish, okay? All right, so let's see what's your view right now. Cheng Hui is bearish. Vincent, Jerry, and Susan all kind of feeling sideways. Okay, fair enough. Okay, the rest is all busy. Okay, never mind. Now, I want to bring to you something here itself, okay? Not too sure how many remember this story, okay? Now, long time ago, I think about 20 to 25 years ago, right? When we saw this door jumping and jumping and jumping, it's called the bubble tea door. You remember that? How many of you remember that? If you remember, this is our KREM. Now, last time when this bubble tea came to Singapore, I remember the story very clearly. It was a national paper. It says that the door was jumping at a very scary way, and it actually served bubble tea. And really, at that point itself, right, people was not very comfortable with it because they find the door was a bit ominous, and of course, it had bubble tea, putting something inside there as well. It just doesn't sound right. So a lot of people don't like it. Okay, so you go to Pasar Malam last time itself, right? You see bubble tea, no one really buys. Then after that, as time goes by, right, I think more Taiwanese come into the picture, and then they start to really redo this bubble tea image and sell bubble tea like a cool thing to the younger generation, and they make it so interesting itself, right? And of course, the advertisement came in was really wow. So again, because this is I can't find a better picture. I want to find the one that the ladies were jumping in Orchard Road, but I can't find the picture anymore. So I got to find something closer to it. So of course, again, the picture's a little bit not so nice. Okay, so I feel that there's some young kids around, so I had to do some one-secking. So just let you know, yeah. So what happened is right. Wow. So owners had to get very beautiful ladies to do bubble tea, you know. Okay. So obviously it's right. That catch on a lot of attention, and a lot of people really enjoyed having bubble tea as part of their life. My kids love them. Every other day, if they can not drink, if they drink anything, prefer they'll drink bubble tea over Coca-Cola. I tell you that. Anyway, so what happened with that as well, right? So what happened? Everybody get into this mode whereby everybody buy bubble tea. Okay, and it was crazy that people really need to drink it, like it's like essential. Every single day must drink it. Okay, now why am I talking about bubble tea here? Now, what after that itself is just simply how market works. At the start, no one wants it. Then after that, the boys comes in, they rebrand it, they do marketing on it, and then make sure things happen. And when the crowd come in, everybody jaws in and then start to buy certain thing. But once it's at the high itself, right? Okay, obviously it will come to a point they couldn't take anymore, the price pullback. But you notice that as a price pullback itself, right? Instead, right, at a higher price, people buy. But the lower price, as the price come down, people start not to buy. And this is something that you must understand. It's the same thing in the stock market. And when that is whereby retailers are coming in to buy, right, the question is who is actually selling. And if you put them together itself, you actually feel the same thing right now. Because now you can see the S&P 500 is now actually, if you look at it from the trading point of view, technical, the high itself, right, was at 48.18 back then. And ever since then, it has been going down very steadily. So now the number that the market is looking at itself is looking at 4,300, so that we may hit the same technical point, and then there might be a pullback. This is what everybody is expecting. Okay, so that is what everyone wants it to happen, 4,300 to be traded, so that everybody can take some profit from the market. But you see, the question is, if everybody is waiting at 4,300 to take profit, the question is who will be the dumb to be buying from now till 4,003, and then after that, let you take profit. Don't you think that it's a bit funny here? So truth be told itself, right, this is something that whereby the traders are looking at it, will that be the possibility? All right, so the thing is this, let's take a look right now. Now we all know that what happened to this Berkshire Hathaway, which I just shared this with you. Okay, moment, yeah, there's some. Okay, Berkshire Hathaway reported the operating earnings was good, but in terms of their investment wasn't that good, right? Because the stock market had pulled back down. So the thing is this, you guys look at carefully itself, right? The total revenue itself, right, actually have increased from quarter to quarter, right? 6.9 billion to 77.6 billion. But you also notice that their investment and derivative contract gains and losses, this one have increased. See, can you see that? So the media didn't really talk about this, right? They actually focus on this particular side whereby the earnings to Berkshire Hathaway investors and shareholder has went down. Now, why it goes down is because, as I said again, you have the stock prices coming down. So naturally itself, right, you can see this. Here we go. Can you see that? The earnings before income tax itself, right, has went down quite a fair bit. So this is the reason why the number is negative. But again, this is just only temporary. That means that unless the stock market continue to fall for the third quarter, then we have a problem. So let's go back in. So now you can see, we will go back the tape again, right? Okay, so what happened is this, the last quarter itself, right, was somewhere around here. And of course, the share price went down, recover, but not to the same level. So naturally itself, right, the earnings will be bad. And we compare the last year itself, of course, it'll be worse because last year prices are much higher. Okay, so the thing is this, but for Warren Buffett, as we all know, right, he have been buying stocks and they only buy and concentrate on a few. Who are they? Let's take a look right now. So Warren Buffett, right, basically his portfolio only really circumvent over 5 counters, and these are the counters you can take note right now. First of all, is Apple, the number 1, Bank of America, number 2, American Express, number 3, Chevron, number 4, and last one is Coca-Cola. Now, in terms of this heaviest weightage itself, obviously is Apple. Apple holds up to 41% of the entire Warren Buffett Berkshire Hathaway portfolio for investment. Now, of course, Berkshire have a lot of money, more than $100 billion still in cash. So that's the reason why it's still a lot of money. And of course, $100 billion is not a lot of money when buying share. But when Warren Buffett buys, his whole Jing gang itself, right, will follow him, and that's where the money comes. Okay, all right. So to me itself, right, if ever there's going to be a pullback of a certain value, then of course these 5 companies will be the 5 companies I'll buy shares, and then I'll buy them cheap, and then just keep it alone for the next few years. I think that we'll see a lot of profit. All right. Now these companies, they don't go like 100%, 200% in the short term, but at least they're very, very stable company. So I repeat myself: Apple, Bank of America Corporation, American Express, Chevron, and Coca-Cola. These 5 companies should be your target whenever there's a pullback in the future. Yeah. Okay. All right. So this is very, very important because once again, right, we want you guys to benefit. Now, coming to my MAO as well, right, the most important thing is must benefit from it by learning something. Yeah, that's most important. Okay, so now the thing is this. I know that I have been recommending this OXY recently. All right, now this is where I get a little bit more detail. Now I remember telling you, right, about OXY. I told you, right, Warren Buffett have been buying so many of this right now that he's nearly 20%. Okay, nearly 20% in stake ownership. But the thing is this: despite he been buying, right, he bought some. Okay, he bought from at this point itself at a starting point about here, between $40 to $55. Okay, that is the first wave. Then around the way, he bought more. On the way down, he bought more, and recently bought more. So which means that this whole area is right, on average is about $58. Okay, around there. So if you do amalgamation between them itself, right, we are about nearly, okay, we amalgamate the 2 value together, 58 plus 40 to 55. So maybe we have about 56. So that's the reason why I share with you, right, if let's say this OXY come down to 56, it will be a good price to buy. Okay, now this is where it gets very interesting. Everybody stay tuned, yeah? It will get very fun and interesting. Okay, now I want you to take a look at the Dow Jones chart for time being. Now this is the Dow Jones chart that I show you guys regarding, right, on how I view the market. So of course we can see that right now the market has traded below the trend line, but it's still way above the downtrend channel. So to me is that this is the first thing to take note of. If ever the market pulls back and goes below 31,500, that is where it returns into the channel. And of course, this time around, the selling could be lower than 29,563. But at the moment now, as long as it's still hanging above the channel, right, to sell itself is going to be difficult. Okay, so now what am I going to share with you now? I want to show you this thing here between S&P 500 versus crude oil. okay, versus crude oil. Take a look, everybody. This is going to be fun and interesting. Now, let's take a look at the crude oil chart right now, right? We all know that the analysts have been telling you this, that as long as the crude oil price actually stays down, inflation will be down, then stock will go up, right? Then let me ask you a question here. Everybody take a look over here. You can see what happened back then in year 2020, whereby you can see that the crude oil price actually bottomed here, and that's where the stock market also in a way bottom up. And when the crude oil price go all the way up the south, right, the S&P 500 also went up all the way. So that means that the oil price and the market got nothing. So why oil price goes up? Because demand went up. So demand goes up because not because of the oil price, it's just because the economy of the world is doing good. So the economy is doing good, that's why the demand for oil is there. Hence, therefore, the stock market will do good. But once you have the oil price at the high, okay, and the stock market is not following through, that is where you should see that the stock market is coming down. Now the point is this: look at crude oil having coming down, right, quite a bit, right? But look at the stock market; it's moving up at the same time. It's not really moving independent. So that is one reason to be careful of. Now take note, very important. What if the crude oil continue to fall? Now, of course, the same thing again. We should expect that the crude oil to hit $120, $130. But you must understand, this was said all this while, and the market didn't really bend an eyelid. And the volume itself has been pretty consistent. So I feel that, right, there's something wrong over here, whereby you have the S&P 500 doing well, but crude oil is not doing well. And over the history itself, right, we did see that crude oil price do move the stock market in a way. Because stock market itself, we have all the Chevron, Philip Conoco, all these companies that all needs the crude oil price to be higher, right? Okay, so with this understanding right now, right, this is where I'm going to share this with you. Take a look, everybody. Sorry, stick there. Now, if I put OXY chart into it right now, this is OXY. I told you, right, at about $55 here to $56, be very important support level. And I mentioned to you this: if the 55 breaks, the next level will come back easily, will be 49. And that's the level that I'm looking at. And of course, if it goes reverse, then obviously it will go all the way to 36. Wow, this is the because I want to show you the fact of this thing right now. Now, if you put the crude oil OXY, you will see a very, very clear picture. Let's take a look. Take a look, everybody. So you can see that right now, right, when crude oil price actually comes down, OXY share comes down. And very incredible, when the OXY and crude oil bottom out, right? That was where the bottoming out signal is. When it hit a peak together, right, both of them actually came off. Can you see that? So you can see that when it hit the bottom again, move together, same thing again. Okay. So now we have an interesting thing. The crude oil price goes up. That's why you can see that the OXY also going up, right? So fair, and it's going according to it, right? But the thing is this: can you see right now the crude oil price and the OXY shares is also coming down, right? Okay. The question is this: we have a very strong U.S. economy, we have these buyers in the market. Then how come OXY is being neglected? Of course, you say because the crude oil price is down. Fair enough. So my question is this: what if the crude oil price really fall down to maybe from here all the way to maybe 55? So what will happen to this OXY? If let's say crude oil really fall to 55, now it's about 59 level, right? So what if the crude oil price goes from 59 to 55 level? What do you think the OXY will be? OXY now is trading at 55, yeah? All right, can I have your answer right now, everybody? If the price is going down to $55, all right, then we have to sell, right? How bad will OXY go? Give me a number, guys. I want to hear you out. If let's say we're going to come to this point also. Okay, I still don't get any answers from the crowd. Okay, I do the maths for you, okay? Now, crude oil price right now, as you can see, crude oil price right now is trading at about this price here at about $88. Okay, $88. And OXY now is trading at $55. This OXY is crude oil. Okay, all right. Can you understand this? Okay, so now we move backward. The highest point for crude oil recently was about here itself, and that was somewhere around here, about 86, about $118. So $118 on crude oil, and that was where OXY hits a high at about probably $74. Okay, all right. So you can take a look at here yourself. So the thing is this: when the difference between them is $30, and here itself is simple 20, now make it simple 20. So the thing is this is going at a ratio, right, of 3 to 2. Okay, so that's why now crude oil is to come down from $88. If crude oil comes down to, let's say, example to, let's say, $80. Okay, what's the price of OXY? Can anyone do the maths for me? If crude oil price from $88 goes down to $80, down by 10%. All right, with the ratio you just saw. All right, technically on there. So how much will it go down? All right. Anybody can do the maths for me? You understand where I'm coming from? So $30 move to $20 move on OXY. All right. So basically, right, if you do the mathematics, 30 to 1 to 20, right? So $3 move in crude oil will equal to $2 move in OXY. So if that's say from 80, all right, down by about this $8, then OXY would come down to about 50 as Ian, help me exactly. All right. So with this understanding, all right, you guys will know that how do we calculate the potential fair value of crude oil versus OXY. Pretty simple, right? Fico, I think you got it wrong. Yeah, it should be 50. Yes, correct. So with this understanding now, okay, if let's say crude oil goes below $80, then of course, then you can just from here do the mathematics from here. Okay, pretty simple, right? Okay, so got the idea now? You got the idea now? Yeah, okay. So the thing is this, what do I see? Now, if let's say I get it correct, then the economy of the US market is very crucial because the US economy is clearly, reliant on crude oil too, right? And if crude oil price is actually not doing well, this actually speaks regarding about the current situation in the American economy. Okay, let me just something wrong here as well. Okay, so now let's take a look here, everybody. Recently, you can see that the retail net inflows are actually increasing at a very alarming speed. The S&P 500 is going up, that's for sure. We understand that. But the way the retails are buying is very interesting, buying quite a fair bit. Now, the last time you see the retail buying so much, right, the S&P also go up. Then after that, the S&P sell down. Okay, you notice that? Okay. So you notice that when the retail investors come in to buy heavily, what happened again? After that, the S&P sell down. So it seems that every time when retailers are jumping into the system itself, right, into the market, right, the S&P 500 after a while will pull back down, and usually it's because the S&P is going up first, then the retailer jump in. You understand my point? They don't come in and start. They come in usually at the end, and because why? And that's what is happening right now. And now the thing is this: they are buying a lot on those counters, and these are the counters that they're buying. And you can see that the revenue is increasing quite very fast. So obviously they're still buying a lot of Tesla, buying a lot of Apple, a lot of Amazon because they think the shares going up. So now, but the best part of the thing is that now the investors are buying a lot of single stock. rather than they buy ETF. Now, previously they buy a lot of ETF, right? But of course, when the ETF is going down, they are quite upset. So you can see on the chart right now, the ETF is going down, but the single stock is going up. It doesn't make sense. So that means that the single stocks are being bought up individually while the ETF are still going down. That means the remaining counters are actually going down. So there's a very good chance that this is happening. Retailers are dumping away their ETF, dumping all the other stocks, and then concentrate on the selected counters. Okay, fine. But that means that, right, if the retailer get it wrong, then the selling will be very bad, because that means that, right, things will get very fast later on. Okay, so the last time we see something like this of such a spirited buying, right, was around here itself. And you remember it was January 2021. So let's bring back into the tape again what happened in January 2021. Let's take a look, everybody. Okay, here we go. January 2021, right? The stock market goes up, right? All the way from this point at the start of the year goes up. Then suddenly the market just pull back down over a few days later, basically wipe out all the gains over there. So that was what happened back then in January 2021. Then of course we have one big movement then after that another big movement coming in January 2022, and that one confirmed itself was the highest point of the S&P 500, and that was where the market collapsed. So it seems that whenever this thing happens, it is interesting, but usually you see when the retailer are buying, the ETF is buying. When retailers are buying, the ETF is buying. But this time round we have a problem. We have the so-called single stock is going up, right? But the ETF itself is actually going downwards. And this is where the concerning factor is. Very concerning, because over the history, you can see that most of the time itself, that the two of them go in tandem. But this time round, we have a divergence here itself, and this is actually very dangerous. This divergence itself speaks a lot for itself, and this actually tells me that I must be very careful with my investment if it's not the favorite counter, because most likely they will be selling. And of course, just on last Saturday, right, I shared with you about this thing whereby there's heavy buying on the 29th of July 2022. Now, this volume, this valuation that they bought, if I forgot to tell you this, is up to $1.7 billion. Oh my God, up to $1.7 billion in a single trading day. This is really a huge amount. And the best part of this, right, you don't see the mainstream media covering it. That means that this 1.7 billion itself, right, is basically bought by retailer and not corporates. And because of that, right, I put myself in this position here and watch the market. And on 29th of July is where we are. But you look at it the previous time, you can see that when you have such a thing happening, right, when there are a lot of people buying, right, in March period itself, in January period, right, remember, that was the same thing happened. The market actually hit the sideways before it sold out over just a couple of days. So this is actually potentially may happen. So the market may just be sideways for a few days, and then when all the excitement is over, doom, the market will come down very, very fast. Okay, so that's what I can see over here. All right, and you can see, right, Goldman Sachs itself is showing that there's a lot of buying activity in last year March and last year January. So this year March and January, we all know that was a peak of the market. So that was a two peak, and of course you can see very clear what happened to the stock market after that itself. So the best part is this: we are actually doing the same thing again. The market have retaliated by strongly recovering, and I told you, right, 10 to 12 working days, usually that's where the market will hit a peak. So we are now around 12 to 14 days already. So that's the reason why I felt that we are near to a potential sell and the buy. Okay, got it? So traders, you must understand the point here. I'm trying to explain this to you, reading the retailer, the way they buy shares, and the very interesting way how the market react after that itself. So of course, the main driver is because their retail portfolio have recovered a fair bit recently, and that actually makes people very worried. So rather than they look at their daytime job, right, they rather now go and consider to go trading on their own to make some money from the market. But of course, and the portfolio is going up at the same time, they feel that the coast is clear. But we all know that this could be a very, very dangerous bear trap, bull trap, sorry. And this could actually be a problem here itself. All right, so now I want to show you this as well. Let me just give you a bit of updating because my PowerPoint a little bit delayed. Yeah, hold on here. Okay, so now you can see that, right? The retail investors are still congregating. No, as long as the share price is down by 5 to 10%, they don't mind coming in to buy again. They don't mind because they really want to buy. So it's not like value investment, the shares down by 40%, 50%, and they buy. No, they want to buy as soon as possible. So that means that that's why you can see the retail net purchase is very heavy at this 0.5 to 10. Right, this is earning per shares reaction, and this is very clear that people are not, even humans are not able to control ourselves, not about animals. All right, so this is what's happening right here, over here. You can see that now there's a lot of daily buying on technology, but interesting, the company are still missing out their earnings, but they're still buying into it. All right, so discretionary side show very clearly, and utilities also showing it that speculation is more important than having to beat estimate. All right, so this is one issue to take note of that. Yeah, one issue to take note of that. And of course, you can see Tesla shares, the call option recently shoot up so fast. Then everybody think that Tesla shares can go through the moon, but Tesla share didn't do that. In fact, Tesla share came down. It came down all the way. Okay, came down all the way, and down to $865, the level I mentioned. And of course, you have speculation like this, the AMTD and Singa. You know the share price. The share price itself was actually worth less than probably 10 Hong Kong dollars. And then it shoot all the way up itself. All right. So this is how it looks like, the share price on the ADR side. This share price opened at almost flat. And after that, the share price just shoot up to about 10 to 11. And then after that, now it's coming down all the way. Now this is a very typical way the boys are playing this game right now. And of course, another one is this one called Singa. It also has the same thing. All right, it's doing okay. The counter is okay. But he wished to speak to me on the site. And then when I talk to him on the site here as well, we noticed that for this counter, right, is because they're doing monkeypox. So being a monkeypox as well, right, obviously is something that is looking at. And of course, if monkeypox, what they call cases increases, then obviously we have this counter moving higher. All right. So that is what's happening right now on the US side. So definitely in terms of CPI data, we do expect the CPI data to come out a bit lower than last month. It's on 9.1. You should see a 8.8 to 8.6. All right, but of course, in the middle itself, I think 8.8 is a very fair number. 8.8, yeah, let's see how it goes. All right, but the thing is that the crude oil price coming down is all right. I told you before, if let's say the whole economy is coming down, if the whole economy is coming down, the crude oil demand will also go down, right? And that will causes there will be lesser money to make, and then things will get bad and stuff like that. So that's why I say crude oil must watch it carefully. This time around, the crude oil price coming down was not only just because that Biden has won the field, but because I think that generally people now are very scared that what will happen next with the US market, because recession is very near the table. They don't do it for last minute, so they want to really get an official answer. And of course, we all know that, right, this crude oil price can go much lower. We have seen it go to zero before, yeah, so don't forget. So the thing is this, we all know that the normal payroll increased to 528,000 jobs in this July, but they expect the number to go down. So again, if they actually now tell you a good news, you buy in, and then after tell you bad news, then after you will sell, we're crazy, right? So you should buy right now, or you don't buy. Wait for the price to really, really fall to a very good level where everyone don't want to buy, and that's where you come in to buy. That will make more sense, yeah? Okay, so now I want to tell you why am I worried, because the shipping rate has come back. Now the shipping rate itself was all the way from a low price of about $3, has shoot up to $20 at one stage itself, 20,000 to be correct. So because of that, when the price now coming down, so some people say, yeah, that means that the economy is doing well. That's why the price coming down. Well, it's not. It's because either more people are cooking at home, or they are basically right not using much. They are not buying a lot. And if they're not buying a lot, that means the economy is not doing well. And if it's not doing well, there's no need to be going for freight. So actually, this chart have two views. One view, it shows that the inflation is coming off a bit, but the downside is that the demand shows that the lowering demand shows that the economy is not doing that well. The purchasing power isn't there. Okay, so that's the reason why you can read it from two different angles. So in short itself, right, you can see we have the inflation at the highest level in 40 years. Then, of course, it's because we can see that consumer price index is high because the CPI is high. So in a way, right, let's take note, unless it really drop, then yes, we may see this coming down a bit. But if not itself, right, if really the market is starting to hover, you may do a 9.1 or higher. Wow, then that is where things get very messy and scary. Okay, guys, so that will be the alternate market news for today. And I'm telling you this, the retailers are buying means you should be very careful. That's the bottom line and the takeaway for today. Now for chart wise itself, right? Okay, let me just show you now the chart for today. So it may have intermittent breaks, so just take note of that. Yeah. Okay, let's go. Now today for our TWB system itself, right? It actually tells us that today is an inverse pivot day. Inverse pivot means that if the market opens, right, it will either be drawn towards a pivot this way or this way. So which means that right now, right, on this context here itself, the market opens and it opens if the opening price and the high the same. And earlier it was MLP but rebounded. So as long as market stays below MLP, there's a very high chance the market will come down to 32,530. Okay, you almost reached there. You're okay. All right, the low of today yesterday was more than that, but you didn't see anything. Okay, so anyway, watch out for this. If the price do fall, 32,530. Okay, if downside comes in. Upside wise itself, right, it's 32,914. All right, it's possible for that, and we all know that, right? This is the price that if the upside will be. So upside price is 32,914. Downside price could be as low as 32,530. Okay. Okay, some technical error here. Okay, let's continue. All right, so let's go S&P 500 right now. S&P 500 also showing the same thing, but it's a normal pivot. So S&P 500 now is heavily resisted at 41.45 for the MLP, but it's now supported at the pivot one at 41.32. So as long as S&P stays above 41.32, it's still safe. And if it goes back higher, 41.69 is MA 200, it is possible. But if the market really lose 41.32, then the free fall will bring it down all the way to 40.70 area. Okay. All right. So take note of this figure here itself. The KSI is green in color, so everything is still okay. Right. Just that it's lowering means the buying is not as strong as last time. Yeah. Now, NASDAQ has turned red today, but you cannot use it for today. So now the MLP at 13,245 is a very critical number, which the market has already broken below it. So if the NASDAQ goes below the MA 200 for 13,188, then of course we should see some profit taking. Okay, you see some profit taking, yeah. Okay. So now what we have right now is that if the market stays above 13,188, it's still okay. But once the market break this level here, 13,134 will be the key support for today. Okay, very important. Yeah. Earlier the MA was really triggered but rebounded already, so that means that the market is kind of supported right now. Now for Hong Kong today, the way it traded was beautiful. The Hong Kong today, the opening price itself, right, was between the two pivots, so it's okay. But once it went up, right, you notice this, it hit the MLP very nicely at 21.83 and then immediately pull back. and the boys are still selling. So in short itself, right, if the market pulls back, 19,946 will be the first support level the market has to hold. If it doesn't hold, then the selling will continue. All right, so watch out for this 19,946, okay? Okay, now this is the Nikkei, and Nikkei is now still pushing up strongly. Nikkei is going for the 28,327. All right, interesting. The KSI is still red in color, but that's pushing up strength. So MLP is definitely one reason. MLP is actually holding up and doing well. Okay, so in short itself, right, we all know that, okay, that this Nikkei, because of the dollar, is moving up, the yen is cheaper. So for it to go down to go up to 28,327, that is very, very high possible for the Nikkei. Okay. All right, so that is all I have for the indices. Let's look at some commodities right now. I need to bring the chart in on here. Now you can see that I'm very delicate with my chart because we have a bit of problem with it recently. So we don't want to like flicker it too fast and then cause a hang in the system. Okay, here is the gold price right now, gold price. Now, I fear that gold price should be coming down because I believe the US dollar is going to go up. On Saturday, I was talking about the US dollar. Let's take a quick look on the US dollar. I suspect the US dollar will be going higher. So US dollar right now, right, is actually heavily supported at this price at 105, the level I mentioned. Now, if US dollar really strengthen and go up, right, the next target itself is back to 110. But with the current situation of the bond prices really not really moving, because now the yield is going up, I mean the bond price is coming down. That means that the potential of the dollar going to 110 itself, right, has its limitation. Now, what if anything happened to US? If anything happened to US internally, maybe a health control issue, a health breakout issue, or something worse than that, maybe you will see that the dollar is going to come down to 100 level. Okay. Now the question is this: is that what will bring the US dollar down again? It has to be an internal story. It has to be something that hurts the US, then the dollar will move down initially. Okay. All right. So that's how I see it for the perspective of the charting view right now. Okay. So this is what you can see for this is the gold price potential. Gold price is below P2 today. So below P2, below OP is a sell. So because of that, right, if the dollar is to really, really weaken, example, then the gold price will go higher. But if the gold price weaken, all right, then I mean the so-called if this thing is happening right now, the dollar weaken, then the gold price will shoot up all the way up. So now for time being for today, it's below the pivot 2. It's now trading at OP. The boys are buying, no blue bars, show that there's some positiveness in the market. But in terms of direction now, it's still trading below MLP. It's not a good sign. So if anything, bring back down to gold, you can see gold coming down to 1746 again. Okay, 1746 level. Okay, all right. So that is gold. And how about silver? Now, silver is also trading below P2 today. The boys are still buying. There's the indicator still pretty bullish, but MLP wise itself, right, is trading above below MLP. So if let's say there's going to be a resistance here itself and the dollar actually strengthen, then we may see the silver being pulled back down. Now, the last time I want to buy silver at around $18, but I missed the low. All right, the low was around 18.1. What a waste. But doesn't matter. If the dollar is strengthened, then we should see the dollar should pressurize down, the gold down, the silver down to 1943 or this level, 18,478, and that is the BMB extended level, 1878 level. Okay, all right, we're ending soon. All right, ending soon. Okay, let's look back to Bitcoin and we'll end it off. Okay, this is not the one. That's why you can see immediately responded. This one is the coding itself is not correct. Oh, now. There we go. This should be the right one. Okay, so for Bitcoin, as you can see right now, for Bitcoin is trading above the MLP at 23,213, right? So the thing is this, it's now resisted at this level here at 23,363 is the KCB level. So you can see it's resisting it, and I still stand to be corrected. I still believe that the Bitcoin is going to come down soon. I know they've been calling for this for a longer time, but I'm not going to stop myself. I told you guys, whenever Bitcoin go to 24,000, you just have to sell Bitcoin. The last time when it happened, it went down, and it happened again, it's coming down. So now I believe that Bitcoin is going to come down, and I still believe that 20,000 is the first target right now for my chart, but 18,000 is the ultimate level. I believe that this will happen. Now, of course, why am I against Bitcoin? No, you got it wrong. I'm not against Bitcoin. I just believe that Bitcoin will be sacrificed during any time that's necessary to reduce the inflation in the market. So in my opinion, it's all right. Bitcoin should go down a bit lower. And of course, Bitcoin, if it goes down, then we have a problem because Bitcoin and this S&P 500 has a very incredible relationship. Okay, just let's show it to you one more time and you understand my point here itself. Okay, let's show you one more time. You can see this again. Okay, this is this S&P 500, right? Okay, look at this. Now I combine this with Bitcoin. You will notice that, okay, the Bitcoin and the S&P 500 go in tandem. Can you see that? Can you see that? So when I see this as well, right, what I see now is that the S&P is going up on its own, right? But the Bitcoin is trying to recover from the low end of the 18,000. So now we do have a very interesting, all along is our S&P 500 and the Bitcoin, right? The beta together is quite near, right? Can you see almost locked in together? Okay. But now what we see is that you can see the S&P is here, but the Bitcoin is here. There is a price differential. So which means that right now that if let's say for some reason, if let's say the Bitcoin do go down, then S&P would follow, and it could be even worse than that. So that's the reason why I felt that, right, this S&P chart and the Bitcoin has a very, very interesting what they call relationship between them. And if that's way, if Bitcoin is going to show us the pathway, watch out for Bitcoin. If Bitcoin actually falls, then that means that, right, the S&P should be coming down soon. Okay, so it's the same thing for Ethereum. All right, wait a minute, I have a lost connection. So you can see it's not very stable at the moment right now. It's disconnected, so I can show you the Ethereum. All right, so once again, guys, you can see live is that even for myself itself, we're having a bit of problem. So it's not that I have a better set, okay, here is that it's really a general problem across the board. So it doesn't matter, guys, don't worry, we should be able to get this fixed by next weekend because we already contacted and we want them to get it done, okay? All right, guys, that will be all for today. Apology for not able to show you Ethereum chart. Later in the afternoon, I'll show you the DPS video later on. I'll show it to you live. And of course, I sincerely hope that you guys are able to make money from the market. All right, this is Cal. All right, wishing you all the best for today and tomorrow. Remember, drive safely. Enjoy the National Day tomorrow. All right, I'll see you guys on Wednesday. This is Cal signing off. Bye-bye.